Hi everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. Before I get into today's technicals for Bitcoin, I'm going to go over what seems to be a somewhat common Elliott Wave count. Just at the verge of all-time highs, I see people expecting that this is not a new bull run, this is a B wave within a bigger fourth wave correction. In order to fit that into the context, I think this would be the best way you could do that. This has horrible proportion though, but you could force this wave count. I'm going to tell you why I think it's a really low probability wave count. I'm not going to say it's wrong, it's possible, I just think it has a very low probability. The problem here is from the inception in 2010 to this high, cycle wave 1, this looks okay, but now cycle wave 2 is ignoring this rather obvious triangle, A, B, C, D, E. That looks like a pretty good triangle and then a fifth wave up out of it, but you can't have a second wave correction as a triangle for its sole corrective structure. So you have to ignore it. And now you've got a problem with cycle 2 lasting 3 months and primary 2 1 degree higher lasting 8 months. That can sometimes happen when a big third wave extends, but the difference here is just too great. Now you've got a second wave correction lasting 8 months and a fourth wave lasting 12 months. The fourth wave here is longer lasting than the second wave. Now it's okay for fourth and second waves in cryptocurrencies or any market with extreme volatility that forms exponential growth and parabolic growth curves for it to exhibit a fourth wave that is more brief than a second wave, but quite unusual, not unprecedented, but unusual for a fourth wave to be more time consuming than a second wave. So this problem here further reduces probability. The brevity of cycle wave 2 reduces probability. The time consuming primary 4 in comparison to primary 2 reduces probability further. From this low to this high, this is a beautiful 5-wave impulse. It could be a fifth wave, but there could be the end of a third wave up here, and it does fit with MACD. The middle of the third wave though should be this portion, but it's this portion. So this doesn't fit with MACD, this part of the wave count and this part of the wave count. If the third wave is over here and the fourth wave is underway, now you've got a really big problem. This isn't the biggest problem, but it's absolutely huge. And this problem means that I would never publish this as an actual valid wave count. It's technically possible in the way that lots of things are technically possible. Cycle wave 2 lasted 3 months. Cycle wave 4 so far is only 2/3 of the way through, and it's already lasted 27 months. The gross disproportion in the wrong direction, 4 longer lasting than 2, not the other way round, severely reduces the probability of this wave count. But the biggest problem is the strength in this upward movement, increasing volatility, strong push from volume, and some instances of parabolic growth within this give it all the hallmarks of a bull run and not a bear market rally. The final problem is this wave count is expecting quite a big trend change. It expects C has to move reasonably below the end of A. B can make a new high beyond the start of A if you see A as a zigzag or multiple zigzag, which it absolutely will subdivide very nicely as. If B moves beyond the start of A, then 4 could be a flat correction and C should move below the end of A. So this is expecting essentially a trend change. If we get a new all-time high, then this will be the last higher low in a series of higher lows and higher highs. If we get a new all-time high, then following that, a new low below 15599.05, the low of November 2022, would signal a very strong trend change. So this wave count is anticipating a trend change before it's happened. And I keep saying one of my maxims that's gotten me out of trouble over the years is always assume the trend remains the same until proven otherwise. This wave count expects the trend change while the market has been in a bull market for over a year and is showing a lot of strength. I would never publish this wave count. It's possible in the way that lots of things are possible. It's just got a really bad probability. The last completed session for Bitcoin did not manage to make new all-time highs, so again my expectation for early March is probably about right. It looks like we might have another small consolidation within an ongoing upward trend before the upward trend resumes. When it does resume and when price makes new all-time highs, I expect energy to be released and see explosive upward movement. There will be further consolidations and pullbacks along the way, and Elliott Wave will put that into structure. There'll probably be fourth wave corrections coming up. I can't give you my Elliott Wave count for Bitcoin. The one I just showed you is obviously not my Elliott Wave count. That's why I'm showing it for you. I can't show you mine because it's by subscription only on my website. If you want it, you can get it, but you'll have to pay for it. It'll probably pay for itself within a week, so I think it's worth it. Anyway, moving on. This upward movement here has a strong increase in volume and an increase in volatility as measured by ATR increasing. This is a strong bullish movement. This does not look like part of a bear market rally or a B wave. There's just too much strength here. Resistance above 68,800, but we're seeing a consolidation a little bit before that, just about 64,000. I wasn't able to find any good areas of resistance when I looked left on the chart, but we're developing one now, so I'll expect a relatively brief and shallow consolidation. If it develops into a pullback, I would expect very strong support, about 53,000, if it were to get that low. But I don't think we're going to see a deeper pullback here. I think we're probably going to see either a shallow pullback or just a sideways consolidation, kind of like what we saw here. The moving average situation is full ball bullish. The short is above the mid, which is above the long, below the chart. They all have positive slopes and price is above all three. Volume is pushing price higher, and the volume for the 27th of February is the strongest since May the 15th, 2023. This is an extremely bullish volume profile for Bitcoin. An inside day comes with a slight decline in volume as price falls of its own weight yesterday. ADX is still increasing, telling us there's an upward trend, which is quite a long way to go before it gets as extreme as it can get for this market. RSI is still overbought. There's no bearish divergence. You don't always see bearish divergence at the end of a strong upward movement though, because those upward movements end with so much strength. They don't end with weakness, so you're not going to see that bearish divergence. So you're going to have to wait for bearish candlestick patterns. We do not have a bearish candlestick pattern on the daily or weekly to indicate something bigger to the downside may be approaching. Money flow also overbought. I'm not going to indicate bearish divergence here because there's no pivot developed on price and money flow to do so. ATR is showing a strong increase in volatility. ATR is a measure of volatility. It's very normal for Bitcoin when it has bullish runs to show strong increases in volatility. My Elliott Wave count for Ethereum I can show you. Ethereum is, I expect, possibly just moved through the middle of a third wave. If this analysis is wrong, I'd have to move this out and just say this is probably an incomplete third wave. But right for now, I'm going to consider a third and fourth wave may have ended 29th of February, and now I'd be expecting a strong extended series of fifth waves to end these third waves 1 degree higher. They almost always exhibit fifth waves that are stronger than the third waves, particularly within a third wave. So within a first wave, you'll sometimes have a first and fifth wave that is equal in length, about even, but within a third wave, you'll have a third wave that is strong and a fifth wave that is even stronger. When it arrives, Minuet 4 may not move into Minuet 1 price territory below 2717.2. This acceleration channel is drawn around minute degree waves, which you can see on the higher time frame. Yesterday completed an upward session for Ethereum, but the candlestick is closed red with a bearish upper wick. But it doesn't look like we're going to see an evening star candlestick pattern because so far 1st of March is so far a green candlestick. If this 1st of March closes strongly red, then we'd have a bearish candlestick reversal pattern with these three. We'll have a look at that tomorrow, but so far this has probably got a little bit too much of a lower wick to consider this a shooting star, nearly a shooting star. So if you want to kind of fudge that, a little bit of fudging going on there, this could be considered a bearish reversal pattern. Not a really strong one though, and it doesn't have push from volume either. Look out for next resistance above about 3,580. It looks like price has found resistance just a little bit below that, so yeah, pretty close to where I was expecting it to have a wee pause. So I'll expect a little consolidation or pullback about here. If it's deeper than I expect, I'll look out for support about 2,700, but I don't think it'll get that bit deep. The moving average situation for Ethereum is also full ball bullish. The short is above the mid, which is above the long. They all have positive slopes and prices above all three. Upward movement did have a strong push from volume. Not as strong as this previous session from 9th of January, but still good strong volume. ADX tells us the upward trend is very extreme, but still not as extreme as it can get when Ethereum has a bullish run. RSI is overbought, there's no bearish divergence, but again, those third waves, they can end with strength and not exhibit bearish divergence. That's what happens when you have parabolic growth. At the end, you won't see any weakness. It's really, really strong at the end. So no bearish divergence. Sometimes you see it at the end of a larger degree movement. Money flow overbought. I'm not going to indicate bearish divergence because there's no pivot developed here. There is short-term bearish divergence here, but that was resolved by a small consolidation. And ATR showing a really strong increase in volatility for Ethereum. This is a sign of a bullish run, not a bear market rally. I have 3 daily Elliott Wave counts for XRP. I'm going to go through them today. This is the preferred Elliott Wave count. It now becomes the only main Elliott Wave count. This expects a leading diagonal is unfolding for minute wave 1. The diagonal is a zigzag for 1 and 2 and 3 probably now complete, and 4 to now move lower. 3 is now longer than 1 at 0.0996 and 1 was 0.0910. So the diagonal is expanding as I had expected. I expect that to be because the 4th wave should end at a trend line drawn across these 3 lows, and for it to do that it's going to have to be longer than the 2nd wave, which means the diagonal should be expanding. So I'm expecting support at this line. I'm expecting a choppy overlapping pullback for a few days, if not a week or so, to find support at this line right here, and when that's done I'll expect more choppy overlapping movement, a zigzag up for a 5th wave which may not be truncated, so it must move above 0.6256 and it must be longer than the 1st wave. It has to be longer than 0.0910. So let's see if this Elliott Wave count unfolds as expected. Let's expect a zigzag down for a pullback for XRP. When the leading diagonal is complete for a 1st wave, then a deep 2nd wave correction would be expected to follow, and finally a strong extended 3rd wave to show some real strength. So a lot of hesitant mucking around and overlapping choppy movement, generally trending up and then down and a bit of sideways. A lot of basing action still I expect for XRP. I don't think it's done with that yet, unfortunately. It is a laggard. But we do have new highs above 0.6236, so this Elliott Wave count can be discarded because this no longer makes sense. Because if we're seeing an ending diagonal down for minus C, minute 4 may not move beyond the end of 2. This wave count is invalid, so this alternate can be discarded, and this alternate can be discarded because micro 2 may not move beyond the start of 1. So I've got 2 bearish alternates. I can now discard them. That gives me a little bit more confidence in this main bullish Elliott Wave count for XRP. Then that's a really good illustration of why you should always consider alternates wherever possible, and even if they look unlikely, when they're discarded it gives you more confidence in your main Elliott Wave count. On the daily technical analysis for XRP, a bearish upper wick developed for the 29th of February. Found resistance about 60 cents, was unable to close above it, had a good test, couldn't get there. Look out for support again in the 54-55 cent range. Upward movement had a really strong push from volume, so even though XRP is forming basing action, it does have some bullishness within this. Upward movement has good strong push from volume, and downward movement showing a decline in volume. ADX is still declining. It's getting down toward low levels, which is going to finally give us a decent signal for XRP. Not there yet though, no clear trend indicated. RSI is neutral, as is money flow. ATR, along with volume showing an increase, along with price moving higher generally, this is a strong signal that this upward movement is part of a bullish run and not likely to be a bear market rally. And that's it from me today with your extra update, and I hope everyone's having a lovely day.